Hi guys, welcome to the video. So one of my subscribers asked me a question, and that's what I'm going to be responding to today. He asked me, he actually dropped a very valuable comment. He said, "This is the most helpful video on YouTube right now. God bless you, brother. I love the way you explained it with zero clickbait. Please post the remaining and talk about these two: balance price ranges and liquidity voids." Then he also told me that, can I explain weak gaps? That they're still a little bit confusing. Okay, so that's basically what I'm going to be doing here, and I think the best place to start is weak gaps. Okay, so let's talk about weak gaps. All right, so basically, what is a weak gap? All right, a weak gap is the first place you need to know is, or the first thing you need to know is where it's found. All right, weak gaps are found within swing highs. And do I really need to start explaining what swing highs are again? Swing highs and swing lows, basically. They are found within swing highs and swing lows. But do I need to explain it? Because I explained it in previous videos. Okay, let's see. Let me see. I'm trying to find a tool that will help me to mark it out while I'm talking about it. Let's see. Please bear with me, give me a minute to find my marker. Okay, yes, highlighter rather. Okay, so what's the swing high? It's or swing low, basically. I'll draw out both. All right, it's swing high. There's a middle candle that is higher than a candle's high to the left and a candle's high to the right. That's the easiest way I can explain it to you, and it's not more complex. It's not complex at all. All right, same thing, swing low. There's a middle candle. It's lower than the candle to, okay, sorry, I might need to delete that one. Wait. All right, make this favorite. All right, so for swing low, there's a middle candle. All right, it's lower than, oh my days, I can't draw for shit. Sorry, I swore. Okay, basically, there's a middle candle. It's lower than the candle to the left, candles low to the left. All right, and it's lower than the candles low to the right. Very simple explanation. I don't think there's anything simpler than that. All right, so that's basically what the swing high and swing low is, or are. So let me delete this from my chart now. Now, like I said, the weak gap is found within the swing high and swing low. All right, how do we know it's a weak gap? All right, you need proof that price is clearly moving in a particular direction. All right, if you watch my previous video, I say I like to look for 4 candles, but it's not in every situation I look for 4 candles, right? For instance, let me explain. You should already know what the market structure shift is. Okay, you should know what the market structure shift is. If you want me to create a separate video explaining ICT confirmations and all of that, I will explain it. Or let's see if I can even explain something like that in this video. All right. Yeah, so basically we swept liquidity here. Let me draw that out. Liquidity is also found in swing highs and swing lows, so I just saved you the stress of having to go and Google that by yourself. All right, and relative equal highs as well, which is relatively simple to understand. Okay, so we swept that pool of liquidity there. Okay, when we did that, all right, you can clearly see we came down and then we had a shift in structure. What is a market structure shift? A market structure shift, when we sweep liquidity or we trade into a fair value gap, you begin to look to your left. All right, you look for short-term lows, or if we're bullish, short-term highs that price will break below. All right, it doesn't have to close below, but once price penetrates below this low, right, it's officially a market structure shift. You just need to look for displacement, basically fair value gaps. For instance, what we have here, we traded into this fair value gap, right? When we did that, look for short-term highs to your left. What do you have? You come to this one. Okay, the moment you break above that, that's a market structure shift, fair value gap, boom, like that. So it's that simple. It's not hard at all. All right, so basically yeah, so the moment we broke below this, all right, we don't need to close below. Okay, we can just wick. That was a market structure shift, so it has already given me confirmation that we are officially bearish. All right, so I can declare this area. All right, so I'm showing you where the wick gap is found now. I hope this clears out the confusion. Okay, clearly declaring this area. The wick gap. Now, what areas of the wick gap can we trade to? 25%. All right, those are significant levels. 50%, 75%. All right, now I will have you notice that the moment we traded to this level here, the 50%, you can see how we shorted. All right, sniper, like from the weeks down, that was a whole bearish week on Monday the 8th of June that week. All right, so that's very clear, I believe. Let's take another example. Let's clearly see. Now, when do I look for 4 candles? When do I look for 4 candles? Let me quickly dwell on that a bit. Then I'll show you how to invalidate a weak gap. Okay. Now, we have an inversion fair value gap here. An inversion fair value gap is basically a fair value gap that was bullish, but we came and closed below with a body of a candle below the low end of the fair value gap. For instance, for if it was a bullish fair value gap, or the high end of the fair value gap if it was a bearish fair value gap. All right, let me see if I can find an explanation for. Yeah, you can see. Okay, well, that's not an inversion fair value gap, but okay, yeah, this is the best example, right? Okay, no, that's not an inversion fair value gap. Well, it should make sense, I believe. Okay, yeah, so this was a bearish fair value gap here. Okay, we closed above it, and you can see price respecting it here. All right, we closed above it. Let me draw that out. So yeah, we closed above it on this candle here. Then we used it on the next candle on the 13th of June 2022. So basically, I'm drawing out the low end because we've closed above it, sorry, below it on the 7th of November 2022. Now stretch it out in time. You can clearly see we utilize it here again. Okay, boom. Now what do we see? We can't just see a swing high and say, oh, we're bearish. We can't do that. Why can't we do that? Because there's no confirmation. Literally no confirmation. Price has been bullish. Literally no confirmation. So what do? We simply wait for the 4th candle. And when we waited for the 4th candle, we had also broken below this swing high here. Okay, so meaning we took liquidity and we broke back down below the pool of liquidity. But that's not even really important. We just need 4 candles. So you can see 1, 2, 3, 4. On this 4th candle, did we go and sweep out the swing high? No, so we're bearish. So at that point, it is confirmed. That's when I look for 4 candles, okay, where we've not had a market structure shift or some form of confirmation in the marketplace yet. That is also a confirmation. The 4 candles, okay, 4 candles. I allow my swing high to form before candle. So now I've explained that. Let's use the fib tool to show you what then happened. Can you see clearly? Look at this. You can clearly see that we now went to go and use the 50% level, or rather we used the 25% level. Yeah, and we shorted from there. So beautiful, happy days. So yeah, we've covered that. Now let's cover another form of weak gap. Okay, weak gaps can have different forms. All right, and this is also a weak gap. Remember, every candle's wick is a gap. All right, but not every candle's wick can be used for instance, we can't say the moment we trade to this candles wick on Monday the 8th of June that we're going to sell from there. That's improper. It's not going to work, because I've just given you the instance to confirm that price is actually bearish or bullish, to know if to use that as a weak gap. But now, what's another example you can use? Okay, this every candle's wick is a gap. Take note. But you can't short or buy from every candle's wick. All right, there has to be you have to just follow the way the concepts are used, right? So the moment we closed above this candle's wick 50%, all right, that becomes a gap. And you can clearly see price came back and used it. Price came back and used the 50%. All right, right there, and you can see price bought from there. So happy days. Another thing I also mentioned in my previous video that a weak gap can also become a balanced price range, right? To be honest, I've not really used this concept like that, but like that crazy. I end up using being drawn to other PDRAs because that's what I've been used to. All right, but basically, when we have the 50% traded above, all right, and it's just one candle in between, just one candle, all right, and then we now see as well that price comes to come and trade to the 50% here. All right, the moment we do that, it is officially a balanced price range. All right, it's officially a balanced price range. So if price should trade to that level again, you should find bullishness there. Okay, so that's that. We should find bullishness at that area. All right, so let's see if you can find an example of the weak gap being a balanced price range to show you. Okay, yeah, so this is an example here. Okay, no it's not. Yeah, perfect. All right, can you see this? And before we continue, I would like you to please like and subscribe if this video is of any benefit to you. So you see other videos I drop, please like and subscribe. If this video is beneficial to you, like, comment, talk about it, ask me any more questions, because I've spent quite a lot of time studying ICT's concept. So I believe the questions that most beginners will ask, I can answer them. All right, so as you can see, we had the weak gap, right? The moment price traded to the 50%, it's officially a balanced price range. Now look at what price did here. Boom. Can you see that? Monday 20th October, the moment we traded to that gap, okay, we used it for bullishness. So that's that. Now let's talk about other forms of balanced price ranges. Balanced price ranges as fair value gaps. Now, if you know what a fair value gap is, it's a 3-candle pattern. All right, now this is a bullish fair value gap. We have the first candle, second candle moves closely with the body of a candle above the first candle, and then the third candle. If you watch my previous videos, go and watch them. You understand why I'm going to do this, what I'm doing now, which is drawing the fair value gap and also including the volume imbalance. Don't just assume something is wrong because you do not know, right? So you draw the fair value gap, all right, but also include the volume imbalance. Now, what makes this a balanced price range? Take note. 2 candles is a 2-candle pattern, or let me say 2 candle. It takes 2 candles to form it, right? The first candle that reprices, all right, price coming all the way down to this candle's number 1 high is called repricing. That's not rebalancing. We've basically just filled the gap, but we've only repriced to that high. Now when price with the second candle then goes and closes above the high of the fair value gap, it is automatically a balanced price range. So the moment we closed above with the body of the candle, this fair value gap's high, it became a balanced price range. Now when price comes back to that level, it's meant to respect it. But note, balanced price ranges can be used for both bullishness and bearishness. How? All right, the moment we closed below this fair value gap's low, which is basically candle number 1's high, all right, it became bearish. If we trade back to this balanced price range now, I would love to see us being bearish and not close with a candle body above the 50%. Now note, I don't think I mentioned this in my previous video, how to invalidate a balanced price range. The moment we close with a candle body below the 50% or above the 50%, it is officially invalidated. What you do at that point is you wait for price to either close below the low or above the high, so that you know what you are doing next. You'll be able to use it again for bullishness or for bearishness. All right, so I believe that makes it easy. Now, a balanced price range does not only come in that form. Balanced price ranges can be the overlap of fair value gaps. Take note, overlap of fair value gaps. Now, for instance, now I think I'm gonna need shape to patterns. Let's try and find. Okay, yeah, it's gonna be in that ugly color because this is the default setting. All right, now let me show you this. As you can clearly see, this is a fair value gap, right? Candle number 1, 12th of January 2026. Candle number 2, 19th of January 2026. Candle number 3, 26th of January 2026. Now, the moment price overlapped with another fair value gap, what do I mean by overlap? You can clearly see candle number 1, 23rd of February 2026. Candle number 2, 2nd of March 2026. Candle number 3, 9th of March 2026. The moment price overlapped this gap, all right, it officially became a balanced price range. You understand? It officially became a balanced price range. So how are we drawing this balanced price range? We draw it from here to here. Right? You can see there's a point where it was invalidated, basically. Or close below the 50%, but it still held. You understand? We could have used other things as well to to mark out price, but basically that's the balanced price range. You understand? You can clearly see it's being overlapped by, let me draw the other fair value gap so that you understand the overlap. It's from here. All right, let's clone this to down here. Beautiful. So you can see it's overlapping it. This gap overlapped this gap. So I believe that has made it simple for you. Is there any other form of balanced price range I haven't touched? Yeah, I think it's as simple as that. Volume imbalances can become balanced price ranges, but to be honest with you, I don't really use them. You understand? So how important is it that you know it? But yeah, so that's basically it. I believe with what I have shared here, it should have a great deal of importance and help in your trading. So till next time, be safe. Love you guys. Peace and love.